Hello and welcome to this Money Control live stream. Friday morning. I'm Nandita Khemka, and of course, we will be taking stock of the cues for trade today, as we are coming off a very strong session on Wednesday, thanks to all the big banking, reforms in the RBI policy announced by the governor. We saw the Nifty Bank Index also leading from the front on Wednesday. Crucial levels were taken out on the downside on the Nifty Bank Index. We are past the key support levels on the index. Whether or not we will see, an extension of that rally, something that we will, of course, ask our experts on the show today. A fresh lease of life after 8 straight days of losses on Dalal Street. Whether or not it has more legs, or was it just the fact that we were in the oversold zone and there was a lot of pessimism in the market, so the markets really lapped up all the good news with all of its, with all its hands. That's something that we'll be watching out for, whether or not we can see a sustained up move here on or not. Lots to discuss in terms of the stocks to watch, in terms of the Nifty levels to track for the day. And of course, we'll also be getting you recommendations from our technical experts going forward. But before all that, keep your queries also coming in. We'll try and take them up with our experts on the show. And before I get them on board, let's take a look at the top headlines at this hour. Wall Street ends at record highs as investors shrug off concerns over the US government shutdown that entered its second day yesterday. The S&P 500 ended above the 6,700 mark, while Nvidia's rally sent Nasdaq past the 22,800 mark. So yes, all three indices managed to clock record highs in yesterday's session. Asian markets too open largely higher, tracking gains on Wall Street overnight. Kospi and Shanghai are shut, while Nikkei is inching higher in trade. The GIFT Nifty, however, indicates a flattish start for our markets. Crude oil prices fell 2% overnight to hit a 4-month low due to concerns about oversupply in the market ahead of a meeting of the OPEC Plus group over the weekend. Gold prices, meanwhile, fell from record high levels to below $3,850 per ounce. And Abu Dhabi-based international holding company will acquire a 41.2% stake in Indian financial services firm Sammaan Capital in a deal valued at 8,850 crore rupees. An open offer is also being triggered, but stock, however, remains in the futures and options band. All right, just recapping Wednesday's trading session. Remember, we are coming off a holiday yesterday. All the global markets were open. The cues coming out of the global markets are fairly strong. And for us as well, we snapped out of an 8-day losing streak on Wednesday. We managed to close at the day's high. The Nifty, of course, cleared that 24,800 mark on a closing basis, although we did hit the 24,850 mark in intraday trade. Banks and auto stocks were leading from the front. Of course, auto sales figures also came out for the month of September, and they were fairly strong. From a slump to a surge, that's what we've seen when it comes to auto sales, and stocks also clearly reacting to that. The Nifty Bank Index rose over 1% after RBI proposed multiple banking reforms. The Nifty Bank Index surged over 700 points to end at 55,348. Experts haven't really ruled out 55,700, 55,800 on the upside. I had spoken to a few technical experts on Wednesday itself, and they were saying that if 55,500 holds, 55,700, 750, these are the kind of levels that the market will be watching out for next. Mid-cap index also moved in tandem with the benchmarks. The breadth was positive. The advance decline ratio was at 5:2, so portfolios were looking pretty good after a prolonged period of sell-off. Tata Motors deserves mention because it ended higher by 6% or so, but in intraday trade, that stock rose somewhere around 10% after strong sales data for the month of September. Also, they came out with the record date for the CV business demerger that happens to be October 14th, according to the company. Shriram Finance is another stock that deserves mention. It rose 5% after the management denied any stake sale to a global giant. Sun Pharma, that's another Nifty giant that deserves mention. There was some bit of reprieve, after tariff-related sell-off that the pharma space saw. It has struck a deal with Pfizer and on the basis of that, the stock was up somewhere around 3% or thereabouts. Lots of other movers in Wednesday's session. We had the likes of Hudco that jumped over 4% following strong second quarter loan disbursement growth. And a lot of these NBFCs were also high flyers in trade after the RBI proposed that risk weights, for lending to infrastructure related companies will be reduced. So, which is why we saw a rally in names like Hudco as well. Sun TV is another stock that deserves mention. A positive brokerage note came out with respect to RCB deal. Of course, we know that Adar Poonawalla is looking at buying out RCB. So, that came off as a sentimental impact on the shares of Sun TV as well. Other stocks include the likes of Lupin, Rights, all of these were among the gainers on Wednesday. The put call ratio that jumped to 1.18 vis-a-vis 0.9 in the previous session. If you look at the stocks in ban, RBL Bank is back in the F&O ban, but Sammaan Capital, that is a newsmaker this morning, it remains in F&O ban for today as well. In terms of fund flows, foreign investors continue to hit the sell button. 1600 crore worth of stocks sold in the cash market, but domestic buying continues to provide cushion. So, DIIs or domestic institutional investors net bought shares worth almost 3,000 crore rupees in equities in the cash market. But on that note, let's figure out if our technical expert is on with us. Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Okay, he will be joining in just a bit, but let's take stock of what the markets are doing in the pre-open session. Not looking all that rosy this Friday morning, let me tell you that. One would have thought that there would be an extension of the rally that we saw on Wednesday, but in the pre-open, we are looking at a 90-point cut on the Nifty. But let's see if we really open lower or not. We'll wait for prices to settle in the pre-open session to really call out how the market will open. In terms of the GIFT Nifty, cues are fairly muted with a negative bias, which is why I think in the pre-open we are seeing a bit of a negativity, on the headline indices. But yes, banks will continue to be in focus. Quite a few brokerage notes have also come out on the impact of the RBI proposals for the banking sector as a whole. Lot of reform related announcements or proposals that came by from RBI, higher loans against shares, higher loans against debt, infrastructure financing by banks that hasn't been seen in a very, very long time, reduced risk weights for lending to infrastructure projects. So yes, lots of reforms. And in terms of the headlines coming out of the policy, although we didn't really see a rate cut, but that was made up by the kind of announcements or proposals that were put forth for the banking sector as a whole. We'll ask our experts whether or not banking stocks are up for a re-rating after the slew of proposals that came in from the RBI. But aside of that, auto stocks will again hog the limelight because quite a few auto names came out with their September sales data after market close. So, you had the likes of ICICI Motors, Royal Enfield sales hit all-time festive high. They managed to sell units, 1.24 lakh units in the month of September. Total sales for Royal Enfield were up over 40% on a year-on-year basis. And if you look at the total sales with engine capacity up to 350cc, that grew 43%. Total sales with engine capacity above 350cc grew somewhere around 45% on a year-on-year basis. Hero MotoCorp also reported numbers or sales data right after market close. Their total sales were up 8% at 6.87 lakh units. That's also above what the street was estimating. Total domestic sales were up 5%. Exports were up 95% for Hero MotoCorp. Even for TVS Motors, total sales were up 12% at 5.4 lakh units. Two-wheeler sales were up 11%, but if you look at the domestic two-wheeler EV sales, basically the electric vehicle sales, they were up around 8%. Three-wheeler sales were up 60% on a year-on-year basis, and total exports also saw double-digit growth of 10% or thereabouts. All right, then on that note, let me introduce our technical expert. Then joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, lovely chatting with you. Happy Dussehra and happy festive season to you. We went into that holiday, yesterday's holiday, with a good mood, given the fact that RBI announcements did breathe a fresh lease of life into the bulls. 24,800 was cleared. What's the setup looking like for today, given the fact that the pre-open is not suggesting a positive start? Do you think it was just a one-day wonder, or do you think we have the capacity to extend the rally into today as well?
Hi, good morning to you, Nandita, and thanks for your kind wishes. And wish you a very, very happy Dashera from my end, and ICICI Securities as well. To all the viewers of Money Control as well, very, very happy Dashera, and I hope that this festive season brings lots of wealth and happiness in everyone's life. Now, as far as the markets are concerned, Nandita, I would say that one thing which is very clear is, in this past 1 year, if you've seen the kind of setup in the Nifty, Nifty has broadly traded within this range of say 25,000. 400, 500 on the downside. It has most of time, on many occasions, it has taken support out there. And on the upside, it manages to inch towards 25,200 levels. Even in fact, in a couple of occasions, one or two occasions, it managed to surpass those levels, but could not sustain higher above those levels. So broadly, this has been the range. Now, interestingly, this time what has happened, Nandita, is that 25,350 was the low, then after 400, and this time approximately between 500 and 600. So we have been seeing this higher highs, right? So that is what has happened, which is positive. Of course, RBI maintaining the status quo is positive for the banks in the short term. It would not weigh much on the margin pressure. The NIMs will not be impacted much now, and definitely with this GST cut, the festive season demand is likely to help the auto and the financial stocks. Now, PSU banks are already doing good, Nandita, and along with that, auto has been doing good as
Hmm.
well since a couple of months. Metals is doing good, and now recently we have seen some participation coming from OMCs. So these are the four sectors which are very clear and are positive.
Hmm.
Now, how much can they help Nifty? They can help Nifty to inch towards 25,000 again, or maybe 25,200. The real move should be that if private sector banks, surpasses their recent highs, or maybe even inches towards their recent highs, or Bank Nifty in fact manages to surpass 56,000 levels, there is where you will see a major up. Or else, more or less, we can see Nifty reversing from the lower end of the range, Nandita, so now it can inch towards the higher end of the range, that is 25 to 25 200. That's what we can see. And in last 1 year, we have also seen that after 6 to 8 days of fall, we generally see a couple of days of a bounce.
Hmm. That's true. After a prolonged period of fall, we do tend to see a couple of sessions of up move. But talk about the big newsmaker today, Sammaan Capital. The stock has already seen a 20 over 25% surge in the last 5-6 odd sessions. The stock is in news given the fact that it has cleared the 8,850 crore rupee preferential issue to Abu Dhabi based IHC, which will be acquiring a 43.5% stake and become a new promoter. The open offer has also been launched under the SEBI takeover rules, for an acquisition of 26% stake at 139 rupees per share. The stock, of course, is in the F&O ban today. But what should one do with this counter? It's very close to that 52-week high of 170 odd. How would you trade into it? Do you see, the last few days move as a fresh breakout move, or do you think it is approaching a top? Should one book profits, buy into it? How should one trade into this counter?
As you rightly said, Nandita, that since the stock has now entered into the ban, so obviously you will not be able to, get into the F&O space. But then it has reached to a level, and the news is out. So I think some profit booking can't be ruled out. 180 is a very clear resistance in the near term. Above 180, you can further see some hope. Else, there can be some consolidation now between 180 to 160.
Okay, expect some bit of consolidation between 160 to 180. But first takes, let's take stock of the market open. A very flat start, not as deep as what the pre-open rates were throwing up earlier. but it's just about 20 odd points down, 24,800. We're managing to clutch on to that level. The Sensex also down 100 points. The good part is that the Nifty Bank Index has opened the day on a positive note, although it's very flat, but still trading higher by about 40 odd points or thereabouts. Mid cap index outperforming as of now, almost 0.3% kind of gain coming in on the mid cap index. The breadth is looking solid for now, almost 5:2 on the NSE, but let's see whether or not it remains skewed towards gainers or not. It's kind of a mixed start, soft start, so to say, after the rally that we saw on Wednesday. 1167 advances to 487 declines on the NSE. Let's take a look at some of the other movers then as to how other sectors have opened the day today. The metal pack is leading from the front, down 1%. I think that can also be attributed to the fact that the dollar index has cooled off. After the government, US government shutdown, the dollar index is in fact at a 1 week low. So that's perhaps come as a booster for the metal pack. PSU Bank Index that took a breather on Wednesday, incidentally, is back in the driver's seat. It's up over 0.5%. You have the pharma pack also trading mildly higher. The Bank Nifty, as I mentioned, is trading with the positive bias. No big gains there, although. But autos are off to a very slow start. IT is down. Remember, we have TCS numbers coming out on the 9th of October. Ahead of that, some bit of jitters. FMCG also in the red. So, mixed start in terms of sectors as well. But let's take a look at some of the individual movers then. Before I talk about Sammaan Capital, just want to take stock of the index gainers. In Tata Steel, that is topping the charts, 3% higher on Tata Steel. Tata Motors extending its rally, solid rally from Wednesday. It's up almost 2%. IndusInd Bank, Axis Bank from the private banking names are doing well. From the PSU banking space, SBI extending rally up 0.5% or thereabouts. As I mentioned, Tata Motors already. Hero Motocorp that reported sales figures after the market hours, that's in the green. Dr. Reddy's, Cipla from the pharma pack doing well. L&T that was witnessing a bit of profit taking the entire week, Monday to Wednesday, has managed to edge back into the green. That stock is up 0.5%. Aside of that, you have HCL Tech from the tech space that's managing to do well. BEL, Bharat Electronics in the green. What's not doing all that well is ICICI Motors. That stock is down 1.5%, although sales figures were pretty good, above expectation, but still some bit of profit taking there. HDFC Bank not doing all that well. That stock is down 1.5%. Bajaj Finance, Eternal, Bharti Airtel, even Maruti for that matter, trading in the red. Infosys, Hindustan Unilever, Nestle and Bajaj Finserv are some of the other laggards in trade. Talking about some of the auto names, Jay, autos have already seen a very good uptick. ICICI Motors, Hero Motocorp, etc. From the two-wheeler pack, what is catching your eye now? Because Bajaj Auto has been an underperformer, and ICICI Motors, despite good September sales data, is the top Nifty laggard. Should one go for something like Bajaj Auto now, given the fact that it has underperformed the likes of a Hero Motocorp?
Well, no, I don't think so. I think Hero Motocorp is doing good. The commentary out there has been positive as well. Bajaj Auto numbers are not that great, and obviously, it looks that Bajaj Auto price is relatively too low, and the stock has been underperforming its peers, especially Eicher, TVS, Hero, all of them. But then that's what it is. We would not see the upward momentum very sharp unless it turns out well in the numbers as well. So I think we need to wait for one more monthly sales number. Probably, if October improves, then going forward, I think it could be a better, uh, play for Bajaj Auto going forward. Otherwise, I think that so far, Hero Motocorp is still offering a good risk reward. In fact, Nandita, I would say that the stock has been consolidating within a range of say 5,200 to 5,600. 55, 5,600 in the short term, and this is the 400 points range. Rather, if it breaks out beyond this range of say 5,500 or 5,600, then you can see the stock climbing towards its lifetime high levels as well, which was around 6,200. So there is a fair chance for Hero Motocorp to do so earlier than Bajaj Auto to move towards its lifetime high.
Hmm. Okay, Hero Motocorp still looking attractive on the charts if you compare it with a Bajaj Auto. Just taking stock of Sammaan Capital once again. The stock, in fact, is trading in the red as we speak. But let's move on to some other stocks then. VMart Retail, I want to touch upon this stock. It's up 6.5%. Came out with its second quarter update. Revenue from operations up 22%, same store sales growth at 11% on a year on year basis, and it has opened 25 new stores and shut 2 stores during the quarter. The stock is clearly reacting to the good update that has come in for the second quarter. It's up almost 7%, and it's seen good traction if you look at the last 1 month chart, although it has cooled off if you see where it was 6 months back. But is this a renewed leg of up move here on a V-Mart retail? What are you making after the kind of traction it has seen in the last month or so?
VMart definitely, is too oversold, I would say, Nandita. And it's a non-FMS stock, so I have to look at from the point of view of technicals or con. And in the past, it has taken a good support around these levels only at around 700. So whenever it has come down to 700 in the recent past, it has managed to bounce back from those levels and in fact inch towards the levels of say 900, 950 as well. This time around as well, Nandita, it has bounced back from these levels from quite sold territory. The momentum has turned positive. So yes, you can expect 840, 900, probably 950 as well. I mean, we have festive season as well, so definitely it's going to help all of these kind of stocks. So 700 till those levels are held, you can see some further move coming in VMART.
Hmm. Okay, the stock was in oversold zone. 700 key support level to watch out for on a VMart retail. But let's talk about metals. They are shining bright in today's trade, and of course, the metal pack as a whole has been doing well because last 2-3 months when markets were not doing well, it was the metal pack that was actually outshining most of the stocks, also hitting 52-week highs. Today, we are seeing good traction in Tata Steel. That stock is up almost 3%. Other names like JSW Steel are also doing well. What do you like within the metal basket? Do you like the ferrous metals, the likes of Tata Steel, JSW Steel, or would you look at other names like Hindalco for that matter?
Well, Ferrous is doing good only. I mean, if you see JSW Steel, if you see Jindal Steel, they have been outperformers and they have been making lifetime highs. And but the non-ferrous names as well recently, I mean, Tata Steel definitely within the ferrous names is doing good and has been joining the up move or the upward momentum along with JSW Steel. JSW Steel is one stock, Nandita, I would say, which was consolidating within the range of 1100 to 900. There was a 200 points range which provided a breakout on the upside. So probably, I mean, that definitely makes a case for a target of 1300 beyond for JSW Steel. Looking at this breakout as well as we've seen long build up there from the derivatives point of view. So this is one stock which I find relatively better as compared to the risk reward as well as overall technicals or derivative position as well. Tata Steel definitely has been joining and
Hmm.
the party has been trading higher, but the exact risk reward is not suitable as of now based on the downside risk. So I would prefer a JSW Steel and a Jindal Steel over any other stock as of now. And from the non-ferrous names are also doing good. So maybe Hindalco, maybe you look at the Hindustan Zinc. These names are also doing good. So overall metal pack, as I said, four sectors. Right at the start when you asked me about the market, I said four sectors which are likely to outperform the
Hmm.
market.
Right.
Near term are metal, PSU bank, OMCs, and auto. These are the four sectors.
Hmm. Sure, I got your point. Of course, once again, since you've alluded to autos, want to ask you what you do with Tata Motors. Has staged a
Well,
very, very good turnaround, so to say, in the last two sessions at least. Today, again, it's a high flyer. Uh, should it be bought into?
should be definitely, and this can one should buy with a view that if at all there is a dip, Nandita, then one will be adding it. See, I don't see this stock now
Hmm.
being below 700 level. So if at all there is a dip, say towards 715 or 20 range, should be utilized as a buying opportunity. But there was good amount of shorts built up out here. Last trading session was the first session, Nandita, after a long time wherein we saw a significant short reduction in Tata Motors. And now today we are seeing this stock inching above its previous swing resistance of 725 as well, right? So I think that I mean I would not be surprised if stock surpasses 800 in the near term. I see that happening, and if you see downside risk is
Hmm.
30, upside potential is 67. So there is a one third, two third kind of a risk reward. That is 1:2 kind of a risk reward still in Tata Motors from the near term perspective.
Got your point. Could clear 800 pretty soon, and Jay, you don't see the stock falling below 700. So that's a good sign for the stock. What do you make of the renewed up move that we saw on Sun Pharma on Wednesday? Pharma Pack, of course, came under severe pressure after the announcement of 100% tariff on branded drugs. But would this correction or would the dip compel you to look at some of these generic names in particular? Sun Pharma, yes, on one hand, but what about the likes of Cipla, Dr. Reddy's as well? Do any of them excite you?
Well, Sun Pharma, Nandita, we can see some short covering happening. Pharma space recently has seen some, selling pressure, rightly mentioned by you, that it, lost its upward momentum, went to do some downward pressure because of the announcement of the tariff by the US government. But then, we have seen what, in last couple of days, trading sessions is that there has been a short covering and a reversal in the short-term momentum indicators as well. So there can be some bounce, at least until the levels of say 1700, first of all. And if it managed to surpass 1700 and 1750, those will be critical levels to watch out for, Nandita. Whether it's managed to surpass 1715 and make a medium term reversal. Short term, definitely, you are seeing this up move. It can continue to happen because of shorts already there in the system. And if the markets are bouncing back, then shorts will also get covered. But I'm not reading much into a overall reversal unless 1750 levels are taken off.
Hmm. Okay. 1750 on the upside crucial level. Until then, can't really call it a reversal. What do you do with the net web? Before I come to queries, I want to talk about net web. This stock has been on a tear. I mean, there's no stopping this stock. It's turning out to be momentum stock. Should one chase this?
See, from the point of view of technicals or quant, definitely it has taken off its yearly swing high, Nandita. Now the previous swing high is monthly swing high, the yearly swing high is of 3,000, 3,100. So definitely, in the long term, definitely the stock has reversed. But in the short term, it seems to be too overbought, although it has been making higher tops and higher bottom. But anyone to enter fresh longs or initiate a fresh buy here would not be advisable. I would say rather those already holding it, they should be trailing their stop losses to 3,700.
Okay, 3,700. That should be the stop loss on a net web. But let's shift gears and take up some viewer queries that are trickling in this morning. There is a query that has come in on a Shriram Finance. Naveen has shares at the rate of 600 and wants to know whether he should continue holding on to it or book profits. The stock, of course, saw a good up move, 6% kind of a move on Wednesday. Some bit of a news flow there. But is it prudent to book profits now, or do you see more upside and should be held into?
I think if someone is holding at the lower levels, then 635 Nandita should be the stop loss or trading stop loss for Shriram Finance. It has provided a breakout beyond those levels, hence there should be the trading stop loss, and this stock can see some short covering happening, Nandita, which can help the stock to inch towards 680 as well.
Okay, that's the view on Shriram Finance. I think we are showing the share of NetWeb. The query was on Shriram Finance. So let's talk about the next query then. It's on an Adani Group stock coming in from Reshmi. She wants to know your thoughts on Adani Ports on whether to hold the position or sell. She's not really mentioned her buy price. But the stock, of course, did see an up move after the removal of the regulatory overhang. The entire Adani Group stocks saw renewed buying interest. Where do you see Adani Ports heading? It's at 14, 18 or thereabouts, very close to or inching towards 52-week highs. Should one hold on to their positions, or should one look at selling them partly at least?
No, you are right, Nandita. After the regulatory hangover is cleared, we have seen this momentum coming back into almost all the Adani stocks, right? And that has helped the Adani ports also to move up. In fact, see, we didn't see much of shorts happening here. There was a lot of long unwinding, and this has been one of the outperformers as far as Adani Group is concerned. And now I think that on the upside, 1450 is a level to watch out for. I mean, 1450, Nandita, if Adani Ports manages to take off, you will see a good up beyond 1450. You can see a good directional move, say until 1550 or so, kind of 100 points kind of a. It has so far not been managed, is not been able to manage take off 1450 levels and has been trading within this band of say, 1300 to 1450. So hence I said that if 1450 levels takes off this time around, it would be a big move till 1550. Else, it might just keep consolidating within this range because we've seen a lot of bad and good news coming, but the stock has been trading within this range only. There are not much of leverage positions out here. So if 1450 takes off, yes, there is a good chance of an upward rally.
Okay, that's the view. 1450. Watch out for that level. Hope that answers your query. We have the next query. Then it's coming in from a Satya CK, and it's on United Spirits. For the last month or so, the stock has been sideways, but we're trying to get back into high spirits there. United Spirits. I just want to see if he has any holding. Yes, he's bought at 1450, and he wants to know whether he should average or switch. How should he really navigate? 1450 is his buy price. He's making a bit of a loss here. What would you advise him to do?
Well, I think, see, at these levels, United Spirits, see, there were a lot of shorts out there and has formed a base around the levels of 1300. Then I see that till 1300 levels are not broken, we can see a bounce happening till 1410 to 1450 levels. So I don't know, I'm not sure that whether 1450 comes or not, but 1410 is likely. So if it averages at these levels as well as on dips until 1300 levels are held, there is a good chance of him getting an opportunity to exit beyond the average price. So averaging now and on dips until 1300 levels are held, that would be my advice. And exiting around 1410 would be a good trading strategy, wherein he would get an opportunity to exit above his average price as well as book some profits as well.
All right, that's about United Spirits. Hope that clears your query. But let's move on to our next query then. One query on CG Power from Debu K on whether one should be looking at this particular stock for an investment purpose. Just opening the charts, it's up 0.5%, but hasn't really done much in the last month or even the last 1 week. What would you advise here?
CG Power C had seen a good short covering happening, and there was a huge run up from 690 until 800 levels. But has recently seen some profit booking from the higher levels. Um, I would not say that one can sell this stock, but I would not advise to go long as well, Nandita, because this stock has been pretty volatile and it's already quite high, at a high level. So we haven't seen much of correction. So this stock relatively, or maybe the overall sector is only not performing. So I would rather stick to those sectors or the stocks wherein you have shorts and there is a good chance of short covering. Here, we already seen a run up. So there is a lesser chance of seeing a good up move now from the short covering point of view.
Okay. That's the view on CG Power. Hope that answers your query. There's a query on, on the Nifty futures and options side. Really, it's coming from Geet, and she's bought 25,000 call of Nifty with the 7th October expiry. Wants to know whether she should hold or sell. What would your advice be here?
As I said, Nandita, there can be some bounce back definitely of couple of days. We have seen just 1 day of bounce, but then whether 25,000 until can come until 7th of October. I think this is kind of 50-50, So what one should be doing at these levels is that if someone is holding 25,000 call, one should be selling 25,200 call as well in order to hedge yourself or reduce your risk.
All right, that's the view. Hope that answers your query. With that, we've come to the end of the query segment. But Jay, any recommendations for our viewers for the next week?
Sure, Nandita. At these levels, as I said, that four sectors which I like. So among which, within which I think, one would be on SBI, State Bank of India. Did not participate much in the last trading session, despite all the other PSU banks participating. But then I think SBI has provided a very big breakout from a large consolidation. So I think that at current levels of 864 can be bought. It can be added on dips as well near 850. So average will be around 857. One can place a stop loss at around say 837. So that will be around 20 points from the average price, and one can target on the upside 900 to 925. So that would be my first recommendation, that is SBI. And the second buy recommendation, Nandita, as I said, I'm bullish on the metal pack. So definitely, JSW is one stock which I would recommend for a target of 1300 with a stop loss below 1100. And final buy recommendation would again be from the metal pack, and it would be on Hindustan Zinc, which is trading at around 480 levels. Nandita, a stop loss below 470, one can target around 500 in the near term. So two stocks from metals and one from the PSU bank.
Okay, two stocks from the metals pack, Hindustan Zinc and JSW Steel, and one, of course, SBI, the PSU banking behemoth. But with that, Jay, I would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and of course, appreciate the fact that you help our viewers navigate their stock holdings as well. Look forward to our next conversation as well. Thanks a lot for joining in.
Thank you so much, Nandita, for again inviting me on your show, and it's always wonderful talking to you. So definitely looking forward for more such conversations as well. Thank you.
Sure. Thanks a lot, Jay. On that note, let's quickly take a look at the market before we invite our next guest. We have, in fact, kind of exacerbated those losses. The Nifty is down somewhere around 70 points now. We've slipped below that 24,800 mark. Sensex down 140 points. The mid cap index, meanwhile, is managing to hold on to its gains, and the breadth right now is still skewed in favor of gainers. So that's some positive there. But in terms of sectors, it's clearly the metals pack that's ruling the roost today, with the stock like Tata Steel, emerging as the top Nifty gainer, and JSW Steel, that happens to be one of the recommendations from Jay, is also doing fairly well, up somewhere around 2% or thereabouts. Tata Motors extending its gain, that's up another 1.5% after a 6% move on Wednesday. But what's not doing well are some of the auto names like Eicher, M&M, Bajaj Auto. They are under pressure. Shriram Finance has also slipped into the red after that good move that we saw on Wednesday. But on that note, let me bring on board our next guest for today. Joining me is Vikram Kasat, Head Advisory PL Capital. Vikram, lovely chatting with you. I think this is the first time we are chatting here on my show. Welcome to the show. What are you making of for the market movement? Of course, we saw 8 straight day of losses. Then we had the barrage of good news for the banking sector in terms of the proposals that were made by the RBI governor against the backdrop of the RBI policy. Markets, of course, lapped up any good news with all its hands. But do you think this is the start of a fresh leg of up move, or do you think we will continue to focus on tariff related news? And of course, we've got the second quarter earnings season also kick-starting next week. So would that continue to spread some bit of gloom on the Wall Street? What are your thoughts?
So thank you for the opportunity. And so quickly, first of all, our thoughts are that this is a stock pickers market. It is not like everything will run off. It is a very cautious view would be there on the markets, number one. But of course, we are like gunning for the growth from here on. So there are many positive sides like double rate cut, CRR rate cut, deregularization, liquidity infusion, front loading of government capex, and near 2 trillion in GST rate cuts. So this altogether sets up India up for a positive growth surprise in the near term. And we see 24,400 should be a very good bottom from here on.
Okay, 24,400 should be a bottom. But would you expect the year to end around the 25,000 level, or do you think that that may be off the table?
So we will be in the range of 25,500 to 24,400 kind of. So that would be the broader range this
All
year,
right.
kind of.
Got your
Yeah.
point? Sure, 24,400 to 25,500, the broader range for the
Yeah.
rest of the year. But let's
For
talk
the rest of
about
the year.
the proposals that were made by RBI. Sure. So, in terms of easing regulations for the banking sector, do you think this will prove to be a game changer, especially where pickup in credit growth is concerned? Have you guys upped your credit growth forecast, for FY27
Yeah.
going forward, looking at these proposals? Where do you
So
stand when
of
it
course
comes to
we
the credit
so
growth
of course we see a very
estimates?
strong credit growth cycle recovery over the next 2 to 3 years, and it would be primarily led by the retail this time rather than the wholesale. And wholesale there is a cushion also. So we see significant like growth headroom for the retail with worries over penetration and customer leverage overplayed right now. And from the stocks perspective and the like the sector's perspective, we feel that autos would be the first leg of the like a beneficiary over here, and oppose that there will be BFSI and some banks. So we like Maruti Suzuki, Bajaj Finance, Shriram Finance, and IDFC First Bank to play with the credit cycle growth.
All right. What about private sector? You said some banks will also benefit. Do you think private sector banks that have taken a back seat of late? Of course, PSU banks have been outperforming their private peers. Do you think now we will see a significant uptick in private banking names, and which are the ones that you like within this private banking space?
So I feel that NBFCs would be more preferable from here on. First thing, those are, there is Shriram Finance and Bajaj Finance, and in the banks it would be very selective to IDFC First Bank and ICICI Bank. Since the growth is
Okay,
coming by the
IDFC
retail,
first
so one should
and
focus on the NBFCs first.
sure, got your point. Of course, also about mid-sized banks. What are your thoughts? Because the phased migration to the ECL framework begins only in April 2027, and that too with a glide path of 5 years. That was being anticipated that it would come in much earlier. But do you think this longer transition period comes as a big relief for mid-tier banks, and which ones do you like within the mid-tier banks now?
So within the mid-tier banks, we like number one, like I said, IDFC first, and then there will be a CSB where the recently the business update was really good yesterday, which has come around. So this too would be on the focus from here on.
Okay, okay. What about NBFCs that are lending to infrastructure projects, because the risk weights out there will be reduced. That's the proposal. So the likes of Hoodco, etc. Do you think there's a case for investment there?
No, I don't think so. There is much alpha over there as of now. So it is better to avoid for some time. So that would be the
Okay, better to avoid for some time. Okay, let's shift focus to other sectors then. We have IT numbers coming out. In fact, TCS comes out on the 9th. Accenture results indicated, that the guidance, of course, was disappointing, but it did indicate the fact that BFSI vertical remains pretty strong and there's a lot of momentum there. But of course, for our industry, the Indian IT industry, there are a lot of uncertainties in terms of how the H1B visa curves will play out. You have the tariff uncertainty as well, and of course, discretionary spending that hasn't really picked up as much yet. So, in light of that, would you expect some of these larger names like TCS, Infosys, etc., to revise their guidance lower, or do you think much of the pessimism is already baked in, and they will maintain their guidance here on? What are your thoughts?
So the valuation wise, TCS and Infosys looks really good. They are almost at the bottom of the cycle as of now, feels like. But we are just avoiding IT as a sector as of now in the portfolios. We are just advising Infosys if someone wants to add into IT with 7 to 8% allocation in the portfolios, but not much deeper into any other stocks into the IT as of now. So only focus is on Infosys to be there in the portfolios.
Hmm. Okay, only Infosys. Otherwise, IT is an avoid right now. How are you playing the GST reform? Consumption as a whole is expected to pick up, but which end of the spectrum are you looking at? You mentioned autos, of course, but aside of that, when it comes to discretionary spending, staples, premium plays like hotels, travel, etc. Which spectrum is exciting you the most after the big bang GST reforms?
So I will give you one stock over here. It is ITC. There's a much bigger overhang going around that
Hmm.
BAT will sell the stake over there, they are holding us roughly around
Hmm.
22.5% as of now. And the news is that they will sell around 2.5% stake in like ITC. But our thoughts over the GST and
Hmm.
everything, ITC could be a dark horse over here from here on, and in a year it can move up to 20 to 25% easily. So we are betting more on the ITC as of now.
Okay, ITC. But aside of that, what about the platform companies, the new age companies like Eternal, Swiggy? These companies or these stocks have made good money even at a time when the markets were in the thick of a sell-off. Would you look at some of these names, or would you steer clear?
So we have done a very deep work and we like MobiKwik a lot, if you have heard the name. And we feel that the GMV
Hmm.
search signals
Yeah, yeah, of
100%
course.
growth potential over here. And MobiKwik is experiencing very strong momentum in its payments business, with GMV surging around 203% year on year to 1.16 lakh crore in FY25. So we think New Age will make very good money from here on. And in this space, I like number one, MobiKwik. Number two, First Cry. Third would be Ola. If you have seen, these three stocks would do really well, and these are the contra bets
Hmm.
which no one is looking on the street as of now.
Okay. So yes, those are some of the names: MobiKwik, Ola, etc., from the new age basket. But any other sector that is catching your fancy at the current juncture, and any sectors that, aside of IT, that should be completely avoided right now?
So IT is the number one which to be avoided for sure. And like I said, it's a stock pickers
Hmm.
market. So one should be very sure where to place the stocks in the portfolio as of now. And the ideal allocation should be 7 to 8% given to the one stock. And IT should be avoided from number one sector. And so there are other themes which one should look as there is one, BESS can be a good sector to look after. It's a battery energy storage system. So there is new IPO coming up with its Space Digitech. It's one of the better stock over there. And for this best, the Ola is best placed. So you can see such themes going ahead, like new age stocks, BESS, some of the like infra related stocks. There is one SRM contractors, which looks good. So I'm picking up the pockets in each of the best sunrise sectors as of now.
Yeah. Okay, so those are some of the sectors to avoid, and of course to keep on your radar. But what about defense? Because a lot of orders coming through from the Indian Army, for a BEL, I beg your pardon, for an HAL, etc. And these stocks have already seen a fair bit of correction. Now they are seeing renewed momentum. Do you expect superior EPS growth for these companies going forward, given the fact that the order books are swelling, and of course the government is, really pushing the pedal when it comes to make in India in defense? So your thoughts?
So one of the easiest best over here in the defense is HAL. So 150 EPS can come around in March. So roughly around 6,000 target price from here on, can come into HAL within like 6 to 8 months from here on. So that's one of our top bet in the defense space. Now, quickly shifting to the defense. In defense, the shipbuilding, there are many orders being announced in the last 10 to 15 days. In that, like Muscat Dock, Cochin Shipyard, this looks good. And there's one small stock, Knowledge Marine, uh, that has a very high trigger points over that. So these are the baskets which we are playing into defense and shipbuilding.
Okay, those are the names that in fact are looking good when it comes to defense and shipbuilding. Another pocket is the electronic manufacturing space. we've seen the likes of Dixon, Keynes coming under a bit of selling pressure, especially on reports that perhaps semiconductors may fall under the tariff ambit sometime soon. That these are just reports, but these stocks were seeing good traction, but then again succumbed to selling pressure. Of course, over the weekend, in fact, yesterday there was there was news flow that, of course, when it comes to the proposals for the PMI scheme for electronics component manufacturing, India received $13 billion worth of proposals. Given the rush, do you see this as a re-rating trigger for some of these names?
Yeah, in this space, Dixon is the best beneficial from here on, and the correction has been high. Good, like it's a healthy correction being done on the counter as well. And there are news that the management has guided for the low growth, and the growth will not come into the mobile space also. But I feel while interacting with the management over the last couple of weeks, we feel the Dixon can be a good bet from here on, and the rate has been very good as of now. So in this electronics push, only
Alright,
Dixon we are
poised to
looking for the
benefit.
portfolio.
All right. And what about capital goods as a theme? Because post the GST rate cuts, as companies utilize capacity better and look for capacity expansion, would you position yourself in capital good plays as well as private capex looks to pick up here on?
So we have two stocks in the portfolios. One is Power India, recently which has come into the F&O space also, and other is Kirloskar Pneumatic. So these two stocks we feel there is very good chance of making money over here.
All right, those names from the capital goods arena looking attractive. But with that, would like to thank you, Vikram, for taking out time and joining in. It was lovely chatting with you, and I look forward to more interactions in the future as well with you.
Thank you so much. Looking forward to. Thank you.
Thanks a lot. Well, with that, let's take a look at what the markets are doing at the current juncture. We've paired some of those losses back above that 24,800 mark. The mid-cap index building on early gains, 0.3% kind of an up move. Bank Nifty holding on to its gains. Metals also shining bright as dollar index cools off. The breadth of the market is skewed in favor of gainers, 2:1. That's the NSE advanced decline ratio as of now. And Tata Steel among the top Nifty gainers. That stock is now up 3.5%. Followed by the likes of Axis Bank, Bharat Electronics, JSW Steel as well has picked up traction. Hindalco also doing well, and so is Tata Motors. But the initial public offering of WeWork India, a flexible workspace operator, has opened for public subscription today, and the company is aiming to raise 3,000 crore rupees from its maiden public issue. The mainline offering comprises an offer for sale for 46.3 million equity shares, but there is no fresh issue component. Of course, we will be touching base with the management at 11 a.m. Don't forget to tune in as we speak to the MD and CEO of the company, who will chart out the post-IPO roadmap for WeWork India in an interview with us. So, keep an eye out for that and tune in at 11 a.m. for that. But before I go, a message for our viewers. Introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today. Well, with that, of course, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Have a great trading day, and I'll see you at 11 a.m. once again. So don't forget to tune in to IP Watch.